Hey everyone, welcome back to Corporate Decoder. Get ready for a wild ride through this SEC filing. It's a roller coaster of settlements and stock. You might just need a safety shot afterwards. Let's dive into Safety Shot, Inc.'s latest annual report. This company is trying to make a name for itself with its Sure Shot drink, meant to help you recover after a few too many. But are the financials as promising as the drink's claims? First things first, a little background check. Up until recently, the company was called Jupiter Wellness. Then in August of 2023, they bought the assets to the Safety Shot drink, changed their name, and started focusing on this one product. Okay, so what's the story with this drink? It's supposed to help reduce blood alcohol accumulation and contains 28 ingredients that are generally regarded as safe. They even launched an e-commerce sale in December of 2023. Fast forward a bit, and in October of 2024, they changed the name from Safety Shot to Sure Shot. To make their drink, they're partnering with some well-known ingredient suppliers. That's a good sign. Quality ingredients can make a big difference in the consumer beverage business. They have big plans for the future, like trying out new flavors, different dosages, and more research studies to back up their claims. Speaking of research, they did a clinical trial between January and June of 2024 with 36 participants. The results showed that Sure Shot seemed to reduce blood alcohol content within 30 minutes of consumption. This could potentially be pretty huge. Beyond just measuring blood alcohol, they also used something called the Visual Analog Scale, or VAS, to see how participants felt in terms of discomfort, nausea, and concentration. Now here's where things get a little more complicated. They have recently engaged into a few new agreements. One, for example, involves the purchase of almost 2.3 million shares from just one investor. In January of 2025, they got a notice from Nasdaq that their stock price had been below $1 for too long, putting their listing at risk. They have until July to fix it, or they could face getting kicked off the exchange. They are planning to acquire Yerbay Brands, a beverage company. If all goes according to plan, Safety Shot will acquire all of Yerbay's outstanding shares. To get some more cash, Safety Shot has a deal with Maxim Group where they can sell up to $5 million worth of their common stock from time to time. They decided to focus all their energy on Sure Shot, so they're separating out their Kering Brands business, which dealt with other wellness products, into its own company. Also, they brought in Core 4 Capital for consulting, issuing them stock that will vest over time. There have been many changes to the leadership. John Gulius, Jarrett Boone, and Jordan Scher all have employment agreements outlining their roles and compensation. Danielle DeRosa is the CFO. The company does have patents, particularly on the composition of Sure Shot. However, one patent already expired in December 2023. Because it is a drink, the Food and Drug Administration does regulate its product, and any issues could arise from a variety of factors. Before we get to the opinions, some key facts from the cover page of the report. The market value of their stock held by non-affiliates was roughly $72 million last June. As of late March of 2025, they had about 74.5 million shares of common stock outstanding. Let's jump over the legal warnings and disclaimers and dive into what they are doing. The Sure Shot dietary supplement was launched on our own website and through Amazon in December 2023, and with several big box stores. Let's zoom forward to Section 9. There were no disagreements with accountants. There were no significant changes to the company's internal financial controls. Now for Part 3, where we talk more about the leaders of the company. Let's take a quick look at who's steering the ship. John Gulius is the chairman and Jarrett Boone is the chief executive officer. It's worth noting that if there's a lawsuit against the company, it has to be filed in New York. Alright, let's get to the real meat of the report, the financial statements. Here's how they stacked up in 2024 compared to 2023. Sales came in at around $700,000 compared to just over $200,000. That's great news. But hold on a second, looking at the numbers, the gross profit is negative. That means it costs them more to make and sell their products than they're actually bringing in. In 2024, they lost over $2.4 million. Their total operating expenses jumped from $12.5 million to over $39.6 million. That's a massive increase. Ultimately, the net loss from continuing operations more than doubled to over $48.4 million. Okay, so the income statement wasn't that great, but they were getting started. Let's see what their balance sheet looks like. They had about $350,000 in cash, significantly down from $3.8 million the previous year. Total current assets, things like cash, inventory, and accounts receivable, decreased from $7.7 million to $2.6 million. Total liabilities, on the other hand, more than doubled to almost $9.4 million. It appears they are accumulating significant debt. Their accumulated deficit, basically how much money they've lost over time, is now over $115 million. Now, the company does mention a couple of things that could help them stay afloat and continue with their business strategy. The company expects that its warrants will be exercised soon for cash stall. So what's the overall picture here? The auditors themselves have serious doubts about the company's ability to stay afloat. They're spending way more than they're earning. This is not a great sign. They also have a lot of legal risks. A major risk is that the FDA will reclassify their product into a drug which they did not get permission for. So here's my take on Safety Shot. It's a very risky business. A year ago, it looked like an interesting idea that still had a lot to prove, but its balance sheet has deteriorated massively with expenses exploding without any substantial offsetting income. While their management may be experienced, it is unclear if they will be able to turn around this business in the near future and should be considered speculative. Thanks for tuning in to this episode of Corporate Decoder. If you found this breakdown helpful, don't forget to hit that like button, leave a comment and subscribe for more deep dives into the world of corporate filings.